Hi guys, this video I'll be explaining to you the key things you need to understand when it comes to supply and demand. The demand is the buy area. This is the point where price is always at the cheapest. It is less expensive to ignore because most traders come into that zone to buy from that zone. All right, so most traders have a map that they put when it comes to the demand zone because the price is very low, it's very cheap, it's less expensive, and they want to buy from that zone because the technicality or the reason behind that is that when it's very cheap, it's bounced from that zone to the top. All right, most importantly, sometimes you might not know that it can create consolidation or a ranging move before the last candle push it to the top. So you must be very careful because the last candle will always determine if the demand is going to occur or is going to be a supply. All right, from the supply part, the supply is where the zone or the area or the price point where the price is very expensive. So when the price is very expensive, the traders might not want to buy from that zone. They might be willing to sell and push the price down to the demand zone. So the price goes up and come down in a circular form, let me put it that way, because whatever goes up definitely come down, and whatever comes down will definitely push the up side of the chart. All right, so there are like fundamental news, maybe NFP, maybe unemployment news, or maybe GDP news, inflation news, like that might affect price along the line. But you should always understand that the demand and supply zone must be well respected. Sometimes it's respect, but like 90 to 80% of the time, it's always respected. Even if it's a touch or a kiss on the zone, it will definitely prove to you that the price is returning or the price is continuing the trend. All right, so let me show you how this works in a live chart. Find the supply and demand zone. The first, let's go back to the basis of market structure. Remember, if you're going uptrend, we are creating the new higher high and higher low. And if you're coming downtrend, we are creating a new lower low and lower high. Right, so there is every tendency that if you're in a higher time frame or in a lower time frame, you definitely see the breaks of structure and you see the reversal of the trend. Okay, this is just the basics, right? So the supply and demand zone, it's most important for you to understand that some traders, like ICT traders, can use support and resistance, telling you that the demand zone is the support and the supply zone is at the resistance level. That's not too bad. But how does price move with supply and demand? All right, the price move with supply and demand in a situation whereby when the price pushes to the downside here, you can see that it left a zone. So what you should be looking at is the last candle that created this push to the last side. All right, so the last candle that created this push to the downside, this is where my supply zone is. All right, so I'm going to take you through all this sketch, all right, to the upside and down to where it ends. All right, so you can see that the last candle that pushed to the downside, that's where my supply zone is actually at because the price is very expensive. So buyers can't continue to buy. That's why the price is becoming expensive and people are now selling. They're selling to the downside. All right, so selling to the downside created another new supply zone. All right, so we have the first supply zone, which we can call it our extreme supply zone. All right, and there's another supply zone. It's not extreme, you can just call it a supply zone. All right, though it's high, okay, but it's still supply zone. All right, pushing to the downside, you can see the candles are now falling. The chart is now falling to the downside. All right, the chart is falling to the downside. That's not bad. You can see that there's another creation of a zone at this point, which is a demand zone. You can agree with me that the price is very less expensive at this point. So I can call this my extreme zone. Price goes up when demand is greater than supply. That's when we have more buyers. And when price comes down, it means that the supply is greater than demand. That's why we have more sellers. So these zones are often created by institutional orders, by the banks, the hedge fund, the central banks, and all that. All right. So we have the extreme zone, which is the extreme demand zone. All right. The price then moves to the upside to create another supply. But remember that we have the first supply here, which crosses to the next supply at this point. That's why the price is reversing. Let me tell you, the price always respects the zones. it always respects the zone. The price touches the supply zone, it reverses and pushes to the upside. Now, if you agree with me, you can see that at this point, we have another zone at this point. This is a zone. This is a zone. This is a zone. This is also a zone. But it can be confusing because we're in the downtrend, so we're looking for a change of character before pushing to the upside. So you can't use this as a zone because you can only use maybe another block at this point. All right. So the price pushes to the downside to create another demand zone. You can see is another demand zone. Pushing to the upside, right now we have more buyers coming in to buy, and it pushes the upside. Upside, we have a retest in the extreme demand zone. A retest made the price to be very, very expensive. That's why they are selling to the downside. Okay, so price will continue to retest that zone. All right, so how does traders trade these zones is that we look to buy when price returns to those zones, and we look to sell when price returns to the supply zone. So we are selling because the price returned to the supply zone. All right. Remember, in the liquidity zone, you can see that this part is a pool of money. Okay, we have liquidity sitting right here. Okay, we have series of money sitting right here. Okay, and this zone we have series of money sitting right here. So we have sell in the first instance, and we have a counter order, which is a buy in the other instance. Okay, how do you draw this very, very effectively? The way you can draw this very effectively is when you go to the demand and supply zone is to look at the higher time frame, like 4-hour time frame and maybe 1-hour time frame. If you go to 15-minute time frame, it can be very, very confusing for you, and you wouldn't want to know if the price is going up or going down. I'm not disputing you trading lower time frame, but I'm only saying if you want to see it clearly, you need to go to the demand and supply zone of the 4-hour time frame, because the lower time frame confuses, and the extreme is the most reasonable zone to buy or to sell from. All right, so what I want to say again is that most traders might find it difficult to actually know where the demand or the supply zone is. It's very simple. What you need to do is just to divide your screen into two. All right, so you can tell maybe vertically or horizontally, but I prefer you to divide it horizontally. So when you divide the screen horizontally, you can actually tell if we are at the upside of the chart or at the downside of the chart. Or more so, you can actually use the Fibonacci tool to actually look at the retracement to tell you if the price is reversing or the price is advancing. Let me show you how that works again on the chart. The previous example. All right, from this you can see that we have a clear extreme supply zone, a clear extreme demand zone. How do you know extreme supply zone and extreme demand zone? I've already explained it. You need to look at the last candle before the downward push. All right, so in this zone now, I might want to know if the trend is actually going against me or going for me. All right, so if you look at the extreme demand zone and from the extreme supply zone, the half of the screen is somewhere at this point. All right, so from this point, you can say that, okay, at this zone, the price is actually going up. All right, and from this side, the price is actually coming down. All right, so you can easily divide the screen into two horizontally to just check if actually you're going to the downside or the upside of the chart. All right, if you can't do that, you can actually use your Fibonacci tool. How do you use a Fibonacci tool? Retracement is to look at the swings. All right, it's very, very important from the swing of the extreme supply zone down to the extreme demand zone that you've already identified. You can actually look at the retracement from this point. All right, so you can see that from 100%, we're going downtrend at the zone, and we have 76, 78.6, 61.8. So anything below 61.8 is most likely that the trend is coming down. All right, so, and we have 50% at this point. All right, so you might want to be very, very careful to look at the zone very, very clearly to see if we're actually retracing or we are advancing to the top. All right, so that is that about Fibonacci. All right, let me show you how it works in the real life example, the supply and demand zone in the real life example. Our candle, the time is, the time frame is on 4 hour. All right, so where is my supply zone and where is my demand zone? All right, if you look at the charts from this zone, you can see that we have series of trends coming down, series of trend going up like that, like that. Let me delete this so that it won't be confusing. Okay, so I want to be very, very careful, right? I can see that the current trend is, the trend is actually descending. So I can't actually say that the trend is going up, because I can say that we have series of lower low and lower high, lower low and lower high at this point. So where is my demand zone? Where is the last candle before the upward push? If you can see the screen very well, you can see that we have a red candle and we have this bullish engulfing. So we can actually use this as our extreme demand zone. Okay, we can use this as our extreme demand zone. All right, just to be on the safer side, we don't want to shoot ourselves in the leg. Can use it as an extreme demand zone. But most importantly, you can see that we still have liquidity at the down bottom here. You can see these two bullish candles are actually liquidity. We might want to extend the extreme demand zones a little bit to the down parts, because if we are buying, we might want to buy from this zone and extend to the upside, and our stop loss will be somewhere a bit far, or kind of, maybe you're looking at 4.1 or 4.2 or 3.0 thereabout. All right, you can see. So at this zone, you can see that it's actually consolidating, going up, making it like almost equal, close to equal candles at the top side and the downside of the chart. So you can see support and resistance, and we have a last candle pushing it to the top side. So this last candle is the red candle that I'm using as the demand zone, because this is a place where the price is very, very cheap. All right, so you can see that the price is also cheap at this point, so we can use this as our demand zone as well. It's a clear order block zone. It's a clear order block area. In case you don't know what order block means, you can just check my video. I made a video on order blocks, so you can see that this is actually a place where the price is very, very cheap. There are a lot of orders that was here that push the price to the downside, so it's very, very cheap at the side as well. And we can, from there, we can see this is almost another zone, because it's like a very big break of structure. You can see the break taken to the upside, and that break is a very good one at this point. All right, so looking at the charts, we're at the downside of the chart here. Just like what I told you, you can divide the screen into two just to be sure if we are the downside or the upside of the chart. All right, so I want to use here as my supply. Okay, I want to buy from here, so I might paint these in green because I want to buy from there. Anyhow you want to do it, you just have to know that the mapping must be well done, so that you would know that the green map is the buy and the sell map is the red candle. All right, you can see we also have another one at this point. This candle, after this candle, you can see the push to the downside. Okay, send that push to the downside. So because I want to sell from this zone, so I'm gonna make it in red colors. All right, this is a 4-hour candle. You can see it. You can see it. It's very, very easy for you to draw your supply or demand zone in a 4-hour candle, because it will not affect your trade. All right, you can draw demand supply zone in the lower time frame as well if you see anyone, and if that works for you, that's fine. So you can see we have series of candle almost equal or close to equal at this point, and they are all consolidating for like series of days, like 4 or 5 days. They're consolidating, and this is the last candle before the downward push. Be careful that you need to know the last candle before the downward push, because that is the candle where you are likely to have a strong momentum when the price revisits that zone. Thank you so much. See you another time.